bullish candlestick patterns. So bullish or any candlestick pattern, they are usually the reversal patterns. Reversal pattern means if the market is in the downtrend, and if you spot these patterns at the support or at some level, so you may assume that, or you may find that the market will start uptrend. That means it's a trend reversal. And if you spot the bearish candlestick patterns at the resistance, it may happen that the market will start the downtrend. So we'll discuss here what are the different bullish candlestick patterns and how to trade them with the Bollinger Bands. Right. So the first candlestick pattern is called as the bullish engulfing pattern. You see this. So market is in the downtrend. It's in the downtrend. Now you spot this pattern. This pattern you spot at the support. Right. Now in case of Bollinger Bands, the support may be the middle band or the lower band. The middle band or the lower band. Middle band of the Bollinger Band or the lower band of the Bollinger Band. If you spot this pattern, any bullish pattern at the middle band or lower band, you may assume, or it may happen that the market will start the uptrend. Now the bullish engulfing patterns look like this. You have a small bodied red candle, and it is engulfed by the green body candle, right, which is huge, which is bigger than this small red bodied candle. So this pattern is called as bullish engulfing pattern. A small bodied red candle, and which is engulfed by the green bodied big candle. Now exactly opposite to this is bullish harami, right? If you look at bullish harami, again the market is in the downtrend, right? You have a big red candle, and after that you have a market gaps up. Gaps up means you have this candle is closing here, and this candle is exactly not engulf, but this candle is in the body of this red candle. You see this candle, small green candle, which is exactly in the body of the red candle. So this pattern, if you see, it's exactly opposite to bullish engulfing, right? So this is called as bullish harami pattern, right? And if you spot this pattern at the middle band of the Bollinger Band or lower band of the Bollinger Band, it may happen that market may turn upside, right? Market may start uptrend. Then the next candlestick pattern is called as tweezer bottom, right? Again the market is in the downtrend. We have a red bodied candle, and now exactly at the close of the red bodied candle, the green candle starts, and it is exactly of the size of this red bodied candle or maybe slightly greater than the red bodied candle. But this candle is starting, this green candle is starting exactly where this is closing, right? So this is called as tweezer bottom, right? Again, you may spot this pattern at the middle band of the Bollinger Band or lower band of the Bollinger Band, and the market may start the uptrend from here. Then the next bullish candlestick patterns are bullish piercing pattern. Market is in the downtrend, right? You have the red bodied candle, and the next green candle starts or the market gaps down, and from there the green candle starts, and it closes exactly above the center of the previous. This is the center of the previous red candle. This green candle closes exactly above the center or in the upper half of this red candle. This green bodied candle closes exactly in the upper half of the this red bodied candle. So this pattern is called as bullish piercing pattern. Bullish piercing pattern, where the green candle starts below the red candle, and it closes in the upper half of upper half of the red bodied candle. You see this closing is exactly in the upper half of this red candle. Right. Then the next pattern is one white soldier. So you have the downtrend, right? Then you have this red bodied candle. Now the market gaps up. Gaps up means it opens. This was the close, right? Then the market opens somewhere here, right? And this forms a green candle which closes above the red bodied candle, right? So if you see this pattern is exactly opposite to bullish piercing pattern. One white soldier is exactly opposite to bullish piercing candle. So in one white soldier, the market gaps up and the red bodied candle, green bodied candle is formed, which closes above the red bodied candle. The next bullish candlestick pattern is a bullish counter attack. Right? The market is in the downtrend. The red bodied candle, you see this red bodied candle, and then the market gap down, right? Market gap down. That means this was the close. Then market gaps down here, right? That means the next candle starts here, right? This gap, this is the gap, right? This is the gap, right? This was the close, and this is the open of the next candle. That means if this close was, let's say, 3000, right? Then this gap down will be, let's say, 2900. That means 100 points gap down. That the market is opening here. The next candle is opening here, and from here the market goes up and it closes exactly at the previous close, right? This was the previous close, and this is the current candle close, right? The market is closing exactly here, right? So this is called as bullish counter attack. So market gaps down and it closes exactly at the level of the previous close. This is called as bullish counter attack. Then the next bullish candlestick pattern, it's a 3 candle pattern. It's called as morning star. Market is in the downtrend, right? We have a red candle and we have a small body market. Usually there should be a gap. Ideally this candle and this candle should have a gap in them, right? Gap means the closing here and the opening here, right? There must be a gap, right? So this small bodied candle can be either a red candle or a green candle, right? The color of this candle does not matter. So then again you have ideally you should have a gap either here or here, right? Then the next candle, this candle is a green candle which starts with a gap maybe, and this gap is not mandatory, but if it is there, it's a strong pattern, either this gap or this gap. So then we have 3 candlestick pattern. Red candle, this is red candle, this is either a red or green, and this should be a green candle. This should be a green candle. So if you spot this pattern at the lower band of the Bollinger Band or the middle band of the Bollinger Band, the market may start the uptrend from here. Then you have the next pattern where you see the long lower shadows. These are the lower shadows, right? These are the long shadows. That means the bears came in, they try to pull the market down, but then the bulls came in and they pushed the markets up. That's why you have this. The price went down till here, but the bulls came in here and they pushed up the markets, and it's happening always, right? That means it's a strong bull sign, right? And from here, if you spot this pattern at the support, like middle band of the Bollinger Band or lower band of the Bollinger Band, the market may turn upside. Market may go upside from here, right? So these are the bullish candlestick patterns which you spot at the lower or middle band of the Bollinger Band. The market may start the uptrend. So in the next video we'll see the examples of this, We'll spot these patterns at the lower or middle Bollinger Band, and we'll see how the market turns from there. So thank you for watching.